What's up, everyone? It's Caddy with MoneyVest. So markets here starting to slow down a little bit. We did have the NASDAQ up just about 7 basis points, with the S&P 500 pushing up 12 basis points, and the Dow Jones also slightly down about 13 basis points here, or 45 points on the day. So really just a very flat market, and the momentum is really starting to fade out as of course, we've seen a very strong rally over the last couple of weeks. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. We'd love to have you on board. If you have any questions, please feel free to reach out, and I'm happy to help and answer any questions. And again, you do get access to all the members only videos, private videos, including the Excel spreadsheets, Discord access over 20 plus channels, all trade alerts and trade ideas, very insightful discussions on fundamental and technical analysis, including macroeconomics and options trading as well. So you can, connect and engage with over thousands of traders from a worldwide basis. So link's going to be down below. Again, we'd love to have you on board. Let's just get started. So jobless claims numbers here coming in at 231,000. So we did see quite a substantial, increase from a prior number. So about 18,000 more than what the previous number was. And the consensus was 222,000. So a little bit higher than what the consensus was, but still below the concerning level. The concerning level is closer to 350,000, and we're not there yet. So the moment this starts to kind of drive up higher even further is really when the softening in the labor market is going to continue, potentially for jobless claims. Now, when it comes to Fed's Mester, she continues to believe that there is more potential evidence needed in order for inflation to come down. In other words, in order for inflation to be defeated, there needs to be more evidence, for the central bank to be more convinced. And I think this is going to continue. In other words, they're going to talk tough right now. They're going to be a little bit more hawkish because they want the markets to realize that they're not just talking tough, but they're actually going to be following through with potentially more rate hikes in the future, which obviously the market's not buying that. Market's very much calling the Fed's bluff right now. Jerome Powell was also on a very similar tone, similar page as Loretta Mester, talking about, we're data driven. We want inflation to come down. We're seeing some evidence, but we want to see more. Financial conditions are not tight. Rates could still go higher. And that type of, tone and message is going to continue from most FOMC members. But of course, what they end up doing is not what they end up saying, and what they end up saying may not be what they end up doing. So it's kind of, you really have to just put actions over words at this point, and that's what the markets are doing. So a very flat day on the markets. S&P, NASDAQ, Dow, all of them just basically closing flat. We had over 4,000 stocks here declining on the day, with just under 2,000 advancing higher. Did have Tesla, drop over 4%. Walmart, Costco dropping pretty aggressively. Walmart did report earnings. We had the energy sector rolling over. Intel pushed higher, up over 6% very nicely. Google up 1.5%. Nvidia was up 72 basis points. Microsoft slightly higher. Palo Alto Networks down 4.7%. Did a video on that earlier today, so make sure that you do check that out. And Apple here up 76, 77 basis points on the day today as well. So very nice move to the upside for Microsoft, for Intel, for Google, but of course Amazon, Tesla, and some of the more consumer defensives and energy sector struggling quite a bit. So the entire energy stocks were down, along with cyclicals and defensives. And utilities and comm services, very nice rally. And over the last 1 week, of course, we've got all sectors, all 11 sectors in the S&P 500 pushing higher. Orange juice for the win, once again, pushing up along with rough rice and cocoa prices. And everything else was basically down to red here on the day. Now, Bitcoin now starting to slide lower, down almost 4%, trading just over 36,000. And Ether now also trading under $2,000 at the moment as well. So if you come over to crude oil, pretty significant drop, right? So 4.7% sell-off here, under $73 a barrel, now coming down to this huge support that we've been watching for crude oil. So sitting roughly at around $72, $73 a barrel. A pretty sizable decline here since September. Crude oil prices have been sold off over 24%. That's actually fantastic, because that's going to help inflation. We already learned from the previous report earlier this week how CPI numbers were, again, much better than what the expectations were on the back of declining energy prices, and crude oil prices were again lower than of course the previous month. So if you do see a breakdown below this, next level obviously is going to be sub 70, so closer to 65 per barrel, all the way down to $57.50 per barrel for crude oil as well. So going over to some of the other stocks here. So let's just talk about Bitcoin first. So under 36,000 now. So down almost 5%. Starting to see a little bit of that pullback. And it's not surprising considering how much it's been pushing higher. So it's kind of stayed in this overbought territory for a quite some time. So since October, end of October, it stayed above that overbought conditions for a long time before starting to roll right back down. And that's exactly what we're seeing with the price action obviously following through a little bit here. Ether also starting to get rejected at this resistance of 2,000, 2,100. So we talked about this, in our previous videos where this is clearly a very strong resistance for Ether. Not to mention the RSI also got overbought, and now we're starting to see that pullback for Ether once again. Going over to individual stocks, and before we do that, let's just talk about the markets. S&P 500 coming up to that resistance at 4,500 here. So again, this is the level that we've talked about. That's the red arrow. Yesterday we got a little bit of that rejection. Today, pushing higher, 12 basis points, but really where we are is an overbought market where the momentum is potentially maybe not going to be as strong as what we have seen before, because obviously when we're coming off of an oversold market and when we are coming off of a very distressed market per se, the rallies are very violent, and that's exactly what we witnessed here, like 1.89% gain over 1% day, over 94 basis points. This right here up over 1.9%. So the moves are much stronger in a bear market than they are on the way up, right? Because that's something that we have to always remember, that we see the most violent and most aggressive rallies when we are coming off of a very low point, and we're seeing a very nice oversold rebound from a technical perspective. But the fact that we've already rallied so much, of course, makes it more difficult for markets to see another 1.5%, 2% day moving forward. So that marginal risk to reward is certainly becoming a little bit more on the unfavorable side from a technical perspective. And this is really where the resistance is going to be at 4,500. That's the level to watch. Talking about the NASDAQ, same exact thing. So we're coming up to that resistance of 14,150 to as much as 14,400. So we do have a little bit of gap to fill eventually. But we've got a very overbought RSI and a MACD as well. So markets are, again, without a doubt, trading a little bit on the higher side, and of course a bit more overextended. Now Russell 2000, on the other hand, we've got an analysis on the IWM as well over here. So you'll notice that we are still very much, I would say, range bound, with a support sitting at 162, resistance sitting all the way up to 198, closer to $200. And there's maybe one more resistance level to watch over here. That's going to be sitting roughly at 185 to $186 per share. So that right there is going to be that level to watch for IWM. So very range bound right now. It's been trading sideways in this price action. 186, 187 is going to be that resistance. Support level is going to stay put at 162 for IWM. Going over to Apple first. Let's start with Apple here. Very nice momentum coming in. Coming up to that resistance of $190, so closing in at just under 190. This right here is the resistance that we talked about. A little bit of a doji candle. Once again, overbought RSI and MACD. So not saying that Apple can't go any higher. It certainly can, but the risk reward is not that great. Very unfavorable. And of course, this does make me a little bit more concerned with the market's breadth, and not to mention the underlying technicals, because if Apple is overbought and it starts to roll over, well, guess what? It's going to drive other stocks also potentially to roll over and come back down, which is going to make S&P 500 and the NASDAQ also to pull back as well. So Apple basically drives the overall tech sentiment, and considering that Apple is, again, a bit more overextended here, we just have to practice caution at these levels. And look, I'm optimistic and I'm very much bullish, right, in the market. Overall, I believe long term, there's going to be more growth and more opportunities, but we also have to evaluate where we are technically in the short term, in the next few weeks perspective. Overbought, so I'm cautiously optimistic, and of course not going crazy at these levels. Coming over to Amazon, and Amazon, you'll notice, kind of gapped down, then got bought up a lot. Like this right here was an intraday rally that Amazon had of over 2.4, 2.5%. So red on the day, but green candle on the day does suggest that there was a lot of intraday buying opportunity, buying momentum coming back in. Resistance is going to stay put at 146, so that's the level to watch. And of course, we got a support right over here inside this green rectangle. Again, overextended on the other side, MACD. So I know a lot of the market updates now and a lot of the stocks here are going to get a little bit more repetitive, but that's really the nature of our analysis, and our objectivity here is to evaluate and kind of show you guys that, look, this is where we are. We were oversold in October, so those were buying opportunities, and those are good technical trading opportunities, which is exactly why you go back and you kind of watch that video where I talk about, look, get your cash ready, right? I've talked about those videos in my sort of previous market updates when the time is now, right? Get your cash ready. Actually, you know what? I wanna break this down in more detail. So what I'll do is I'll actually find those videos. 1 second, just give me 1 minute. I want to pull those videos up because, a lot of times I do get comments saying that, Caddy, you're either always bullish or always bearish, or you're not reading the market in a way that, oh, we're pushing higher and we don't need to look at oversold, overbought levels. We do, like, we absolutely need to, like, because that's the overall analysis part that comes into it, is we have to evaluate where conditions and situations are. So if you go back to some of the videos that we did like a month ago, okay, so these right here is where we are coming back to. This is from 1 month ago. This right here is the channel, of course. So, your most important video, and then also talking a little bit about getting cash ready, from October times. We talked about how the time is now to basically be buying, right? So this right here, 1 month ago, I'm ready, time is now. This is a video basically going over how, look, there's opportunities now because markets are selling off, right? I think I did another video going over how, let's see, cash was going to be very, very important. I think that also came out about a month ago. Let's see. But the bottom line is, look, markets are going to fluctuate up and down all over the place. Our job is to simply understand, when it's appropriate to be more aggressive versus when it's not. There you go. 2 months ago, get your cash ready, right? So, and at that point, of course, we had the markets lower in September, October times, and the markets were obviously on their way down even further. But the bottom line is, like, I'm gonna call it when there's opportunity. I'm gonna call it when there's not that great opportunities, when the risk reward is not that favorable. And that's the whole idea behind our analysis and risk reward and technicals, is to better understand, okay, when can we turn the dial to be more aggressive versus when we need to be cautiously optimistic, a little bit more cautious and more risk averse. And I think now is the time to be a little bit more risk averse, be more cautious, considering how much we've already rallied for a lot of these individual stocks. So coming over to Tesla, down almost 4%. So we are still very much in the context of this downtrend. So lower highs and lower lows. And of course, we're coming up to that resistance at 240, all the way up to $250 per share. So those right there are going to be some levels to watch as resistance. Nvidia here, continuing to move up 1.2%, so just a little bit under $500 per share for Nvidia. And this right here, of course, is going to be that resistance level to watch for the stock. A lot of consolidation sideways. We're seeing that range bound pattern for Nvidia trading between $400 and $500. And right now, again, we're overextended, overbought on the RSI and the MACD, and we'll see if you actually do get a breakout for Nvidia past $500, or if you get rejected here once again. Advanced Micro Devices also with a very nice rally, up over 1.5%, so pushing up on the day. Next resistance and target is going to be at closer to $121, $120 per share. So that's exactly the level to pay attention to. And of course, support level is going to stay put at 112. All the way down to low 100s for Advanced Micro Devices. So those right there are going to be some levels to watch for AMD. Talking about PayPal, and PayPal here is selling off on the day once again, coming down to that support. So we're not breaking down below that support just yet. $56, $57 is still going to be that level to watch for PayPal, and resistance all the way up to $65, $66 per share for the company. So right now we're seeing a lot of consolidation for PayPal. And of course, if you do see breakdown below this, $50, $51 is going to be that next level potentially to watch. Going over to Visa. And Visa here on the day was very, very flat. It's kind of like approaching that resistance, so it makes a lot of sense why the momentum's starting to fade out a little bit. 250 is going to be that resistance. Support level is going to stay put at 245 for Visa right now. And of course, we've seen a very nice rally since October. The stock is up over 8.6, almost 9% as well. Talking about Meta Platforms, and Meta here starting to push right back up from that support. So again, this is the green rectangle. This is the support level that we've talked about. So gap down, but then got bought up here intraday. And next resistance is going to be all the way up to $350 for Meta. Netflix here, on the other hand, continues to be very, very overextended, but also sparking another rally of 1% here with the RSI and the MACD. Next target pretty much is going to be 485. I think at 485, Netflix would become a very short, very nice, sweet, short opportunity considering how overextended overbought it would be, and it would be approaching that resistance for the company, right, on the short term. So that's going to be that level to watch for Netflix here. Google, on the other hand, also pushing higher very nicely up over 1.7%. And the next resistance and target is going to be closer to this level right here between 139 and 144. And I've mentioned this before that I wouldn't be surprised if it does end up in the 140 to $144 resistance level for Google here. Microsoft is one that kind of scares me a little bit. New all-time high for Microsoft now. Market cap sitting at just under $2.8 trillion. A very, very overbought and overextended, but a very strong move to the upside for Microsoft at 1.76% to $376 per share for this company. So I would be very careful, very cautious with this company right now. And finally, we've got Costco and Enphase. And Costco here on the day starting to roll over and pulling back on the back of, I'm assuming, Walmart's earnings, which came out today. So down almost 3%. And of course, this right here inside this green rectangle is going to be that very important support for Costco. And finally, Enphase pulling back a little bit after a very strong green day on Tuesday, down about 2.3%, back below that support level of about $92, $91 per share, which will go ahead and turn this level back into a resistance. So bottom line is, I think cautiously optimistic is the name of the game right now, considering how much we have already rallied. But hope you guys enjoyed this video and found it helpful. Make sure that you drop a like. I'll share more insights and more analysis on our Discord. Link's going to be down below if you're interested in joining. And as always, happy investing. I'll see you all in the next video.